Good morning, everyone. You're all very welcome to Thursday's market update here at the Alpha Capital Group. So I suppose from our perspective, quite a bit of data yesterday afternoon, quite a bit of data this morning, and obviously tomorrow, given that we also have NFP tomorrow morning as well. So it's going to be a busy couple of days to round out the week. Markets obviously seeing a very significant bullish run up Monday and Tuesday, and quite a battle is now taking hold as we approach, I suppose, the business end of the week. I suppose when we look at the price action from yesterday, there was a couple of big talking points we had. We had the Kiwi interest rate decision, which out of Reserve Bank of New Zealand, raising rates by 50 basis points, bringing their interest rate percentage points to 3.5% overall after the 0.5% increase yesterday morning. So since then, markets are obviously factoring that in, but they're also looking at the data in Europe, the data in the US, and I suppose some of these bigger imprints that's coming obviously today and of course tomorrow with NFP. Now, structurally, as we look at the markets, we had a lot of ISM data out yesterday, some positive, some negative. Overall, I would say the sentiment was quite mixed. That's why we had quite a bit of choppy volatility after the open yesterday in the US session, quite up and down. We did have some very hawkish commentary again from Bostic late last night. And of course, that kind of brings in the sentiment, obviously, into obviously the retail sales this morning in Europe, which again proved to be quite underwhelming overall. The month-on-month came in less than expected, and of course the retail sales is also coming in less than expected as well. So we're starting to see that dynamic or indication that all of these imprints in terms of CPI, inflation, etc., of course, the higher interest rates and the backdrop of that is now starting to factor into the retail markets, as we see retail sales for products and demand is obviously down as a result of that. So it's obviously quite interesting. Some other news, I suppose, for those who trade commodities and oil this week, we've obviously seen some movement from OPEC to signal a kind of greater cuts than what was kind of expected at the weekend. So initially at the weekend, they were looking for kind of 500,000 barrels in terms of a cut, but that's actually been up to now to approximately 2 million. So I suppose from a perspective of that as well, when we look at the oil markets in a moment, we can see how the fundamental dynamic and shifts in sentiment is obviously driving the prices as we speak at this moment in time. So as we move today, we do have obviously the weekly jobless claims in the States. We do have comments from FedMester. We do also have the data coming out regarding Waller and Mester speaking later on tonight as well. So there's quite a few Fed speakers speaking. Macklem is speaking obviously in Canada as well, out of the Bank of Japan, or out of Bank of Canada, Bank of Canada, should I say. Sorry, guys. And we also have Fed Evans speaking as well today. So we've definitely got a number of Fed speakers to keep an eye on today. We've obviously got the business end of the week, as we know, traditionally speaking, Thursdays, anything can happen on Thursdays when you look at price action. So just being aware of that. And then, of course, tomorrow, the prelude of what will be NFP. So as we look at the NFP tomorrow, obviously we're looking to see the kind of the broader dynamic this year within the employment markets is in the US that these markets overall are holding up relatively well. So we're looking to see the knock-on effect from higher interest rates. Is that now starting to factor into the employment markets, where we look at maybe the reduction in new job numbers every month, but also maybe the cuts and maybe slight increases in marginal unemployment. We did see a slight tick up in unemployment last month, but overall, broadly speaking, markets in terms of the labor market still holding up relatively well in the States as well. So we'll definitely be worth keeping an eye on that tomorrow. Of course, assessing the price action into obviously the close of the week. And then I suppose giving us a good idea of obviously first week of October, first week of a new quarter. How do the markets actually take that into consideration in what was a very, very bearish September, as we know? And of course, see the prelude to what's coming in November, in virtue of the midterm elections, and obviously the onset of what that will have in terms of an effect on the markets as well. So from a fundamental perspective, that's pretty much it. But as we look at the chart today, we've seen obviously the dollar continue to decline. So Monday and Tuesday, we saw that weaker dollar. We saw the indices catch a bit. We saw the indices catch a bit and catch a bit of strength. We have seen quite a lot of chop and volatility really since yesterday morning in the dollar, making that kind of short-term recovery. Now, we have seen the DXY come off that 111.50 area. So from an area of local highs, I suppose that's kind of the trigger point to see how does the DXY dollar index refer and react off of that zone as well, broadly speaking. In the FX markets, we obviously did see that run up Monday and Tuesday. Yesterday obviously did allow for a little bit of a decline, a little bit of a pullback. Again, that's quite natural when you look at the broader trending price action. But overall, this bullish trending price action, as we speak at the minute, is still garnering a little bit of strength. So we had come up in just shy of parity. We had broken through the bottom of this consolidationary zone here at 99. We broke right through, as you would tend to expect, and we've come all the way into this liquidity area here. So this last bit of consolidation where we saw that very, very strong and bearish impulse, the price action has come all the way back into this level and has mitigated that very cleanly. And it's just coincidentally, this took place at around the parity level on euro dollar. Now, when we look at euro dollar in the shorter time frames, obviously that very, very strong reaction yesterday. But since then, it's been quite sideways moving in terms of corrective structure. So I suppose from today's perspective, are we looking for that kind of retest of the highs and pull back into those levels, or are we looking for that kind of continuation in sentiment to the downside and that kind of shift in from what was very, very strong buying Monday and Tuesday to now that kind of midweek reversal and seeing the markets kind of end relatively flat in the week? So very much worth keeping an eye on that. As we look at cable, very, very similar scenario in cable. That V-shaped corrective move came all the way back up to mitigate this daily order block here. So this kind of area of interest here where we can kind of see markets has come right into that 115 level very, very cleanly in that regard. And of course, you can kind of see it there in the daily, very, very sharp sell-off. Then we followed that little bit of consolidation, and then we had that pound crash. So I suppose from our perspective now, we've come all the way back up. We've mitigated this level. Are we now going to see further selling coming through? Now, initially yesterday, the answer to that would be yes. Today has been a little bit more consolidation. We haven't seen that kind of follow through today. And if you're looking for kind of bearishness now, a stronger dollar, you'd really be looking for that kind of momentum to kind of follow through, because otherwise what's going to probably happen is you're going to see the markets hold a kind of a short-term consolidation in this region until such a time that it breaks through and propels to the downside. So that's obviously worth keeping an eye on there. When you look at gold, again, very, very similar scenario. Bearish impulses into that 1675, 1680 level. We broke structure. We flagged all the way back into this local area up here. And notice again, order block area mitigated to the T. Initial sell-off, price action came back in to do a double mitigation of that structured zone. You can kind of see it there at 1723s, and market has now digested that. So is that now the catalyst to drive these gold prices back into the 70s, 80s? Let's wait and see. Short-term highs have been created, short-term higher lows have been created, and on the retest, the price action hasn't broken through. So that would give it a little bit of caution to the upside to say, well, we're not breaking, we're not creating new highs. So therefore, we need to be conscious of the fact that the price action could very easily roll over. And tomorrow, NFP tends to be a very, very strong reactionary move for gold. So that could very easily be the catalyst for either the fundamental breakthrough, or of course that rejection back to those 1670, 1680 levels that we're kind of looking at. From a stock market perspective, if we look at, I suppose, the S&Ps just very, very quickly, first and foremost, we're seeing it across the board. If you look at S&Ps, Nasdaq, and Dow Jones, three very, very similar moving asset classes. We know they're all positively correlated, broadly speaking, with each other. They're all risk assets. They've all created consolidation. So if you look at Nasdaq, consolidation, S&P, consolidation. Let me just tidy this one up. And you can see that we had that initial break to the downside in all three. So S&Ps, all three, Nasdaq, all three, and Dow Jones as well, getting that initial break. And then we got that sharp stop hunt, reversal of liquidity orders, market sentiment changing quite a bit on Monday and Tuesday. And we obviously took the liquidity on the highs on the Dow Jones, on the Nasdaq, just marginally, and on the S&Ps as well, quite comfortably. Now, normally what we're seeing now is instead of getting that corrective move, we're now kind of flagging higher. So it becomes a case of we're creating short-term highs, short-term lows. We've got higher high, higher low, new higher high, pulling back into this region. So now it's a case of, do we get one last third push up to the upside, or are we going to see a change in sentiment? So this area here around 3750, I think today is going to be important on the S&Ps to see, does this area hold up critically to allow that kind of final phase to the upside, or maybe even continuation to the upside? Or are we ultimately going to take this out? If we take this out and we take the lows, that's obviously an indication that maybe sentiment is starting to shift, and just being aware of that also. Same again with the Nasdaq, three very, very similar structures here. Nasdaq around this 11.5, 11.450 level is interesting to me. And of course in the Dow Jones as well, very, very similar area here around about 30,000 to, I suppose, that 30,100 level. So worth keeping an eye on those dynamics today just to see, does these indices hold up? and of course kind of reflecting that back into the price action. Now, when we look at the FTSE, the UK markets, broadly speaking, the UK has done quite well this week. So that very, very sharp corrective move off of that 6,800 level. So this key 6,800 level, very, very key price action structure, very, very plain, very, very obvious to see. Got back above that shorter term level at 7,000. Did come down to retest it yesterday at 7,000. Did obviously bounce off it. So the price action today is obviously holding above it, which is somewhat positive. But today the markets are kind of stalling out here at 71s and is kind of within this range. So I suppose, again, from my perspective, it just becomes a case of how does the markets react at 7,000? Do we take out these lows and come back into these lows down here? Or is the market's going to try and look and stabilize above 7,000? Now, on the 1 hour, on the 4 hour charts, we're still creating that higher high, higher low scenario. So if we do pull back to create another higher low, this is the area that I'd be looking at. Okay, this area here between 7,000, 7,010, for me is an interesting zone of interest accordingly. Now, again, similar on the DAX, very, very strong run up all the way up to 12.5. I was kind of looking at this order block area here, this daily level here at 12,750. As an approximate region to maybe extend into. Now, we didn't quite make it there. We got to about 12,680. So you're talking about 70 points short. Again, similar to the DAX, or similar to the FTSE yesterday, we did hold above that 12.5, that critical level that we've been kind of talking about for the last weeks. But today the markets are somewhat in a structural divergence in terms of, is it going to hold up or is it going to actually ultimately give way? Now, selling this morning has been quite clear. We can see that over the last few hours across the board. So it becomes a case of watching this 12.5 level. If this gives way, the likelihood is you're probably going to see that deeper runoff back into these structural areas down here as well. So I suppose it's important about understanding the price action, understanding the dynamics at play, and then being able to have a clear, coherent plan of attack to say, well, if I'm looking for this, what is my entry catalyst? What's my entry confirmations? And vice versa then, if there's a change in sentiment, a shift in sentiment, if there's an invalidation to maybe the current trend this week, which obviously is the buyers, what is the indications that that's going to play out? What is the catalyst for that to happen? And then being able to react accordingly to that as well. All right. So I suppose from there, then that just brings us to one last asset class, which is obviously oil, something else I kind of wanted to look at today. Just to kind of update people, obviously, on the back of the OPEC news this week. Now, so I suppose this week we have obviously seen that rally off this kind of structured, so this area here, this kind of daily order block area here at 76.50 has held very, very nicely as an area of interest. We obviously have seen the very, very sharp corrective move this week from the weekend back into the upside, back into those kind of high 80s level. Now, from my perspective, if I look at the weekly chart, firstly, I can see that there's a lot of congestion here on the price action over the last number of weeks around this region. So between kind of 88 to kind of 90, 92, there's been a lot of reaction. Okay, we've had a lot of wicks coming above or coming down and obviously holding above the area. Then we obviously had the structured break, then we maintained below, then we had the sell-off. Now the price action's pulling back up to retest. So from a price action perspective, it's all about the battle between the buyers and the sellers. It's all about the sentiment as well, because obviously the short-term news does tend to move the markets. But again, identifying all of these different elements, these different points of interest, confirmation structures. So you're trying to get as much information as possible on the different time frames that you're obviously looking at. Now, weekly time frame, that would be very much indicative of a pullback and retest to see how does the price action react off this weekly order block area here at around about $89.70 to $90. If I look at the daily price action, you can see how we've kind of had that hold. We've had the manipulation, then we've obviously taken the lows, we flagged back up. We've obviously made new lows again, so we're kind of creating that bearish order flow of lower low, lower low. And now we're coming back in to do a double tap retest of this area here, where we're kind of talking between kind of $88 and $90. Excuse me. So that's kind of where we're looking at here. If we do see spikes, short-term movements in price action, and we do see a spike above this highlighted area, then I would be looking at this daily candle here at around about 93 as a potential secondary order block, that if there was market manipulation coming in, if there was a stop hunting move, that's where I would be looking at as an area of interest as well. Just again, opening up your options, keeping all aspects open, trying to give yourself as much coherent I suppose, information as possible, and then being able to reconcile that as well with the prices. So that's where we are for the moment, folks. So we'll obviously come back tomorrow. Thursday, traditionally speaking, is a busy day. We will do a shorter video in the morning to just to preview NFP again. We'll look at the data, look at some of the expectations in terms of the numbers from a data perspective, and then being able to, I suppose, reflect that in as well into the kind of the broader price action as well. All right. Have a great afternoon, everyone. Trade safe. Be careful and be conscious of obviously the risk and the higher volatility in these markets at the moment as well. And of course, as I said, they're trade safe.